a sudden shift in tone from the White House has markets on edge, not because of a signed agreement, but because of a single, unverified claim. President Trump says the U.S. has secured fantastic trade deals with China, a statement made without documentation, without mutual confirmation, and without details. That absence is the story. The Trump-China trade deal, as it's being called, didn't emerge from a formal announcement or joint press release. It came in a brief comment to reporters, unscripted, unaccompanied by text, and entirely one-sided. And yet, financial markets reacted instantly, pricing in de-escalation while supply chains, exporters, and consumers wait for proof. This moment follows more than a year of escalating tariffs. The U.S. imposed levies on hundreds of billions in Chinese imports, citing intellectual property theft and unfair trade practices. China retaliated in kind, targeting American agriculture, manufacturing, and technology. The result: disrupted global supply chains, higher input costs, and a drag on investment decisions across multiple sectors. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. Now, Trump's claim of a breakthrough suggests a pivot from confrontation to negotiation. But here's the catch: no agreement has been filed by the Office of the U.S. Trade Representative. No tariff reductions have been published, and China has not acknowledged any deal. That silence matters. In trade policy, words don't reset tariffs, legal instruments do. The lack of a formal text means the Trump-China trade deal exists only as rhetoric for now. Analysts are cautious. One trade policy expert put it plainly: markets need actions, not optimism. Without verified reductions in import duties or changes in enforcement, the current economic pressure remains locked in place. The real test isn't the headline, it's whether customs data shifts, whether import costs drop, and whether Chinese officials issue reciprocal statements. The stakes are high. For American businesses, especially in agriculture and tech, a genuine thaw could mean restored access to Chinese markets. For consumers, it could mean lower prices on electronics, clothing, and industrial components that have been taxed under the current framework. But if this claim doesn't materialize into policy, those benefits vanish. And the longer the ambiguity lasts, the more uncertainty weighs on capital planning and inventory decisions. The global supply chain trade deal everyone hoped for hinges not on intent, but on implementation. What makes this moment different isn't the substance, it's the timing. After months of public brinkmanship, a sudden declaration of success, even without proof, forces markets to reassess risk. Traders are pricing in reduced volatility. Some sectors are rallying on the hope of normalized trade, but the mechanism here isn't economic, it's psychological. The market reaction is based on perception, not policy. And perception can reverse just as fast if the next signal contradicts the first. The important part is not the announcement, it's what it reveals about leverage. A unilateral claim like this could be a tactic to pressure China into engaging formally, to boost domestic confidence ahead of economic indicators, or to position the administration as decisive. But it also exposes a vulnerability. If China chooses not to validate the claim, the narrative collapses. And with no confirmation from Beijing or U.S. trade officials, the credibility of the entire Trump trade announcement hangs in the balance. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. We're not seeing a resolution, we're seeing a gambit. The Trump administration trade policy has often relied on bold statements to reshape negotiation dynamics. But in global markets, credibility requires corroboration. The absence of a U.S.-China tariff agreement in writing means this isn't a closed deal. It's an opening move disguised as a conclusion. And until there's movement in official channels, the so-called breakthrough remains speculative. So what should viewers watch for? The next signal isn't another press comment, it's a filing, a published tariff adjustment, a joint statement, or a change in Chinese import policy. Until then, the Trump-China trade deal is a claim, not a condition. The market impact on consumers and businesses depends on follow-through, not fanfare. And in the absence of transparency, the only responsible position is caution. The story isn't over, it's just entering its most critical phase, verification.